Interestingly enough, the 10-year yield in the U.S. gave us an inkling. And I actually brought this up in yesterday's video. The 10-year yield actually told us the Fed might be a little less hawkish. In fact, I talked about that. If you watched that entire video yesterday, we looked at the 10-year yield and the dollar, and both were signaling a pullback. And what does that mean? Well, if the Fed is super hawkish, the dollar is going to go higher and yields would go higher. But both were signaling a pullback. And so what do we do when we go here? We look at the 10-year yield. Look, we were right into this level. I've shown you guys this for probably a month or two now, this flat area of resistance and this upsloping, ascending trend line down here. Well, look at where we were yesterday going into the Fed decision, right into resistance. Boom, there it is. Look at the U.S. dollar. Remember, we had a bear flag on the U.S. dollar that I drew in yesterday's video. We went down here, right? Good fall. And then look at this inside bar bear flag consolidation. Yesterday, after the Fed, the dollar fell. It's continuing to fall today. Remarkable how the charts could give us an inkling on that. Now, the kicker I have is this, folks, is that even with the dovish Fed, my thesis is that what the Fed says today or said yesterday should freak the living you-know-whats out of you and me and everyone out there.